Hello, this is Megan Horneman, the Chief Investment Officer for Verdence Capital Advisors. Coming to you today with our regular segment of Markets with Megan. We're going to talk about the JOLTS report that came out this morning. This is a report on the amount of job openings in the U.S. economy. This has been trending lower for the past couple months, and it's been good news for the Federal Reserve because what they've been trying to do is bring that massive number of job openings out there, bring that down without sacrificing a significant amount of unemployment. So they're trying to bring that back into equilibrium. We have seen some improvement there, as I said, but unfortunately in the past month, we saw the biggest jump that we've seen in actually the past 2 years. It was primarily led by job openings or job postings in the white collar area, business, finance, education. But one of the things that we did see in the report is the amount of people that are voluntarily leaving their job. That actually stayed very low. So that was the positive for the Fed side of the equation on the employment. If those people are not voluntarily leaving their job, we saw a substantial amount of people do that in the aftermath of the pandemic. If they continue to hold the jobs they have, that means that they're not super optimistic about future job prospects. So what does all this mean? First of all, for the economy, it's pretty good. The labor market still looks to be pretty solid. But for the Fed, it's putting more and more pressure on them because the employment market is so tight that it continues to spark inflation. And we've repeatedly talked about the inflation concerns that we see and how easy it is to reignite inflation. So the Fed's going to be paying especially close attention to this report. Obviously, today, the equity market paid close attention to this report. We're going to look at this report as one employment report that we get of many. The biggest one will be the end of this week with the monthly jobs report. This report has some nuances in it that we're not going to take 1 month as a trend. We'll take a look at the bigger report that we get on Friday and see if any of this does translate into that jobs report. And that's all we have today. If you have any questions or comments, please feel free to reach out to podcast@verdence.com. Thank you.